For over a decade, Cathay Pacific stayed silent while the Boeing 7X program dragged on. But in 2025, that silence brokened what the airline revealed could reshape the future of global aviation. Is Boeing losing one of its oldest and most trusted partners? Could Airbus finally take the lead in a market long dominated by its American rival? Today, we're diving deep into the story of a multi-billion-dollar order, repeated delays, and a strategic pivot that no one saw coming. Back in 2013, Cathay Pacific made one of its boldest moves in history, a $7.5 billion order for 21 Boeing 7X aircraft. At the time, it was a strategic match. The 7X promised to be the next evolution of Boeing's wide-body jet's longer range, lower fuel burn, and a luxurious cabin designed for international flag carriers. Cathay didn't hesitate. They signed early and in full, confident that deliveries would begin between 2021 and 2024. This wasn't just about aircraft specifications. For years, Boeing had been a reliable partner. The 777-300ER had become a backbone of Cathay's long-haul network, connecting Hong Kong to major global destinations with unmatched consistency. That trust carried over into the 7X deal. But what began as a confident investment is now sitting in limbo, tying up capital and offering no clear path forward. The delays started quietly, but they piled up fast. Structural redesigns, engine complications, certification setbacks, all of it kept pushing back the timeline. What was supposed to be a smooth transition to the next generation fleet became a source of frustration. Operationally, the impact was immediate. Cathay had planned to retire aging 777-300 ERS and A330s as new jets arrived. That plan no longer worked. Instead, older aircraft stayed in service longer. Costly retrofits became necessary, and long-haul route management turned into a logistical headache. Patience, once evident in the airline's silence, began to shift toward skepticism. And what Cathay once trusted as a seamless upgrade was now starting to look like a liability. The Boeing 7X program faced problems that went far beyond typical new aircraft delays. After the 737 MAX crisis, the FAA reclassified the program, requiring far stricter certification procedures. What Boeing had pitched as an upgraded variant suddenly became almost a clean sheet. Aircraft.engine testing added another setback. In late 2023, a component inside the GE9X engine failed, forcing a full redesign. Certification was delayed again, and test flights didn't resume smoothly until early 2025. As a result, Boeing now projects the 7X's entry into service for late 2026, 5 years behind the original schedule. This isn't an isolated problem. Boeing's track record over the past decade has been rocky. The 737 MAX grounding, Dreamliner quality issues, and repeated production delays have shaken airline confidence. For carriers like Cathay, reliability and timelines now matter more than ever. For years, Cathay avoided publicly criticizing Boeing, giving the company the benefit of the doubt. But in 2025, during its Q2 earnings call, that changed. The airline announced a reassessment of its 7X delivery timeline. The language was careful. Phrases like flexibility, fleet adaptability, and supplier diversification were repeated. But the message was clear. Cathay is no longer counting on the 7X as central to its long-haul future internally. Frustration has been building. Planning, scheduling, crew training, and aircraft retirements have all been disrupted by Boeing's repeated delays. Publicly acknowledging this wasn't just about transparency, it was a strategic signal to investors and to Boeing itself. While Boeing struggles, Airbus has quietly moved in. In 2024, Cathay placed an order for 30 A330neo aircraft, replacing aging A330s and providing operational flexibility that the delayed 7X cannot offer. Even more striking, Cathay ordered 6 A350 freighters, with options for 20 more, aligning both passenger and cargo operations under Airbus platforms. This isn't just a temporary fix. It's a strategic shift. For the first time in decades, Airbus is positioned to become Cathay's primary widebody supplier. The airline hasn't cancelled the 7X order, but it's no longer dependent on it. Every Airbus delivery before a 7X rollout is a reminder that patience has limits and Airbus is ready to step in. Delays forced Cathay to take matters into its own hands. The airline launched a retrofit program for its existing 777-300ER fleet, installing the Aria suite, featuring lie-flat business class seats, privacy doors, and upgraded premium economy and economy cabins. This move is costly. Each retrofit costs tens of millions, not to mention operational downtime. Unlike new aircraft, these retrofits don't improve fuel efficiency or maintenance cycles. They only improve the passenger experience. But this patchwork approach has allowed Cathay to maintain long-haul service while waiting for the 7X. Cathay's pivot isn't just a story about one airline, it signals a broader shift in the aviation industry. Other carriers are watching closely, and many are now hedging bets, splitting orders between Airbus and Boeing, and prioritizing delivery reliability over brand loyalty. For Boeing, the clock is ticking. Delivering the 7X by late 2026 isn't just a milestone, it's a deadline. Delays beyond that risk losing not just orders,
While Boeing
but
struggles
trust.
to get the
Meanwhile,
777X off the
Airbus
ground,
is gaining ground in the
2024,
Asia, becoming the
Cathay
default
Pacific
choice for
finalized an
carriers
order for
seeking
30
operational certainty.
Neo,
The 7X order still exists, but the relationship between Boeing and Cathay Pacific has changed fundamentally. Trust, timelines, and reliability now outweigh brand loyalty. Airbus is moving in, Boeing is racing against the clock. And the next 12 to 18 months will determine whether the 7X becomes a flagshipper, a footnote for over a decade. The 7X was more than an aircraft, it was a symbol of trust and long-term planning. Today, that trust has been tested, and Cathay has shown that patience has limits. The industry is watching. Will Boeing recover, or is Airbus firmly taking the lead? The 7X wasn't just delayed, it was redefined. After the 737 MAX crisis, the FAA demanded stricter certification. The 7X became almost a new aircraft. Then, in 2023, the GE9X engine mounting failed tests, triggering another redesign. Flight testing didn't stabilize until 2025. Entry into service, now late 2026 at the earliest, and it's not just the 7X. The 737 MAX debacle, Dreamliner quality issues, repeated production, delays. Boeing's reputation is eroding. Airlines aren't waiting anymore, and Cathay isn't the only one watching. Finally, in 2025, Cathay spoke. Carefully worded statements during earnings calls mentioned flexibility, fleet adaptability, supplier diversification. They didn't attack Boeing, they didn't have to. The message was clear. The 7X is no longer central to their long-haul strategy. Internally, frustration is boiling. Schedules, training, retirements all disrupted. Public acknowledgement is a strategic pressure point. Boeing now knows the days of unquestioned loyalty are over. While Boeing struggles, Airbus is quietly taking over. In 2024, Cathay ordered 30 A330neos. Operational gap filled, efficiency improved. Then came 6 A350 freighters, with options for 20 more. Suddenly, Airbus isn't a backup, it's a real competitor, and for the first time in decades, Cathay's widebody strategy may pivot away from Boeing entirely. Every Airbus delivery before a 7X rollout is a reminder. Patience has limits, and Airbus is ready. Cathay didn't wait idly. The 777-300E fleet got a full retrofit, Aria business class, premium economy, refreshed economy cabins. Expensive? Absolutely. Necessary? No question. But this isn't just money, it's time, energy, and planning. Routes delayed, crews retrained, innovation postponed. Every retrofitted jet is proof that the 7X delays aren't just inconvenient, they're reshaping Cathay's entire strategy. Cathay's pivot sends a message: no airline waits forever. Other carriers are considering the same moves. Dual orders, fleet redundancy, supplier flexibility. Boeing's timeline isn't just delayed, it's now a risk factor. Airbus is gaining ground. Asia Pacific Airlines are noticing. Boeing risks being the fallback, not the first choice. And every day, the 7X slips further. The pressure mounts. The 7X order exists, but trust has eroded. Cathay is planning around delays, investing in alternatives, and signaling to the world, patience is over. Boeing has one chance left. Deliver on time, or risk losing a flagship customer and the loyalty of an entire industry. The next 12 to 18 months will decide if the 7X becomes a hero, a footnote. So, what do you think? Can Boeing recover? Or is Airbus now the dominant force in long-haul aviation? Comment below. And for more insider stories like this, don't forget to hit like, subscribe, and check out our latest deep dives into the future of aviation. Cathay Pacific made a profit $3.6 billion in the first half of the year, a figure that shrank by 15% year. This as Hong Kong's flagship carrier stressed it will maintain its goal of returning its flight capacity to pre-pandemic levels by the first quarter of next year, adding that it will purchase 30 additional Airbus aircraft. For over a decade, Cathay Pacific stood by Boeing. In 2013, they placed a $7.5 billion bet on the 777X, confident it would become the backbone of their future long-haul fleet. But by 2025, not a single aircraft has been delivered. The delays have piled up. Testing setbacks, engine redesigns, and years of radio silence turned one of Boeing's strongest partnerships into one of its most fragile. Cathay said nothing until now. In a move no one expected, Cathay has broken its silence. The airline is reassessing its order, leaning toward Airbus and publicly questioning Boeing's ability to deliver. So, what does this mean for the 777X? Is Cathay walking away? And could this finally mark the beginning of a permanent shift in global fleet strategy? That's what we're going to find out. In 2013, Cathay Pacific made one of its most ambitious fleet decisions to date, a $7.5 billion order for 21 Boeing 779s at the time. It was a strategic move that made perfect sense. The 779 was built as the next evolution of Boeing's long-haul Dominantia wide-body jet that promised longer range, lower fuel burn, and a redesigned cabin experience aimed at international flag carriers. Cathay didn't hesitate. They signed early and in full, with the expectation that deliveries would begin between 2021 and 2024. That window has come and gone. As of mid-2025, not a single aircraft from that order has been delivered. Not one has entered final assembly, and no revised timeline has been officially confirmed. What began as a confident investment is now sitting in limbo, tying up capital and offering no clear path forward. The frustration is layered. Cathay's decision wasn't just based on technical specs. It was built on a long-standing relationship. For years, Boeing had been a core supplier. The 7300ER became a mainstay of Cathay's long-haul network, offering unmatched reliability and range. That aircraft helped connect Hong Kong to key global destinations, and Boeing delivered consistently. That trust carried over into the 777X deal, which was supposed to be a seamless transition to the next generation. But Boeing couldn't deliver on the same terms. The 777X program has faced delay after delay, many of them outside the scope of a typical new aircraft cycle. Structural redesigns, certification holdups, and engine-related complications have all pushed the timeline back. Meanwhile, Cathay has been forced to wait, first patiently, now strategically. The original plan was to retire aging 77,300 ARs and a 330 South as the new jets arrived. That plan is no longer viable. Instead of streamlining its fleet, Cathay has had to extend the life of older aircraft, invest in costly retrofits, and rethink how it manages premium long-haul routes. Every year without delivery has a cascading cost, not just financially, but operationally. What's changed most in the last 12 months is tone. Cathay hasn't cancelled the order, but it's no longer defending it either. The silence that once indicated patience now signals something closer to skepticism. With 0 aircraft in production and no firm delivery date in sight, the multi-billion bet no longer looks like a strategic edge, it looks like dead weight. And that opens the door for change, because when an airline of Cathay size starts reevaluating its loyalty, it's not just one order at stake. It's the entire future of its long-haul strategy. The Boeing 77X was supposed to be the future of long-haul aviation, a stretched re-engineered version of the already dominant 777. It promised longer range, lower fuel burn, and a wider, more luxurious cabin. Boeing claimed it would be the most capable twin-engine jet ever built. But more than a decade after its launch, it still hasn't entered service, and airlines are running out of patience. Delays started when the Federal Aviation Administration reclassified the program. After the 737 MAX crisis, the agency tightened its certification rules, requiring the 777X to go through a far more rigorous approval process than Boeing expected. What was originally pitched as an upgraded variant was now treated more like a clean sheet aircraft. That slowed everything. Then came the hardware issues. In late 2023, a thrust link component inside the GE9X engine failed during testing. The engine itself wasn't at fault, but its mounting design needed a full revision. That triggered another certification setback and pushed flight testing off schedule again. Test flights resumed in early 2025, but progress has been uneven. As of now, Boeing projects entry into service by late 2026 at the earliest. That's a 5-year delay from the original timeline with no firm commitments to launch customers. Emirates, the largest buyer, has already adjusted its delivery expectations. Lufthansa has pushed its entry window further into the future, and Cathay Pacific, which ordered 21 of the jets back in 2013, still hasn't seen a single frame. Their order remains on the books, but not on the runway. The bigger problem is confidence. Airlines no longer trust the 777X to arrive on time, and many have stopped designing their route plans around it. Boeing has missed too many milestones with too little clarity. Carriers that once counted on the aircraft for their future growth are now leaning harder into the A350. The A330neo, and extended life cycles on older 777-3000 ERS. What was supposed to be Boeing's next great widebody is now a slow-moving liability. The 777X still looks competitive, but timelines, testing, and trust have all fallen apart. And for carriers like Cathay, the question isn't whether the jet will fly, it's whether it'll arrive in time to matter. For more than a decade, Cathay Pacific kept quiet. Despite mounting delays on the 777X program, the airline avoided public criticism and gave Boeing the benefit of the doubt. That changed in 2025. In a carefully worded statement during its second quarter earnings call, Cathay finally addressed the elephant in the hangar. The delivery timeline for its 21 aircraft order is officially under review. The phrasing was measured reassessing expected entry into service, but the implication was clear. Internally, Cathay no longer expects the first 777X to arrive before 2027. That's 3 years beyond the original handover window, and potentially even further if additional certification issues arise. What stood out wasn't just the shift in dates, it was the shift in tone. Cathay, traditionally one of Boeing's most loyal customers, is now speaking with deliberate caution. Words like flexibility, fleet adaptability, and supply diversification appeared repeatedly in recent investor briefings. That kind of language isn't accidental positioning. Executives are signaling a strategic pivot. The airline isn't walking away from Boeing outright, but it's no longer acting like the 777X is central to its long-haul future. Instead, Cathay is framing its fleet decisions around optionality and implicit acknowledgement that relying on one manufacturer or one delayed program is no longer sustainable. Behind the scenes, there's frustration. Sources close to the airline report growing tension with Boeing leadership. Missed milestones have made internal planning difficult. Slot schedules, crew training programs, and aircraft retirements have all had to be adjusted, often with little warning or clarity from Boeing's side. That kind of uncertainty is expensive, and Cathay's leadership has had to answer to shareholders who want stability, not promises. Publicly addressing the delay wasn't just about transparency, it was a necessary move. With capital tied up in a stalled program, Cathay needed to show that it's actively managing risk and exploring alternatives. Investors want to know that the airline isn't locked into a no-exit scenario, and this statement provided that signal. It also serves another purpose: pressure. By going public, Cathay is putting Boeing on notice. The delays are no longer a quiet inconvenience. They're a reputational liability, and unless Boeing can regain momentum quickly, it may lose more than just a contract. It may lose one of its oldest and most respected international partners. While Boeing struggles to get the 777X off the ground, Airbus has been quietly filling the gap. In 2024, Cathay Pacific finalized an order for 30 A330neo, specifically the A330-900 variant. On the surface, it looked like a straightforward fleet renewal. In practice, it was the first major sign that Airbus was moving into territory traditionally reserved for Boeing. The A330neos are replacing Cathay's older A330ceos, many of which have been flying since the early 2000s. But these new aircraft aren't just plug-and-play replacements. They're strategic assets, with improved fuel efficiency, better cabin layouts, and compatibility with existing infrastructure. The A330-900 gives CAA's flexibility to manage long-haul and regional wide-body routes without relying on a delayed 777X. The timing also matters. These Airbus jets will begin arriving before Boeing delivers a single 779 that effectively lets Airbus step in and bridge the operational gap Boeing was supposed to cover. But the bigger shift is in cargo. In parallel with the A330neo deal, Cathay committed to 6 A350 freighters with options for 20 more. This marks a major realignment.